Good evening, friends. Here I am again with the continuing series of the Income Tax Act Old versus Income Tax Act New, that is 1961 and versus 1925. So in last video we have done the basic concepts, and in the basic concepts we have gone through the certain sentences. Today we are going to take the concepts. First we will explain those concepts, and then after explanation of those concepts we will compare those concepts with the Income Tax Act 1961 as well as 1925, and we will see how these concept differs in terms of the application. A person was the key term which we are going to explain. Whenever we are talking about the person, any person whose income exceeds the maximum amount which is exempted from taxes and SSE, in this sentence, three words are important. One is the person, another one is the gross total income, and another one is the SSE. Who is the person in the Income Tax Act? In the law, the term person is defined as inclusive definition. It's not exhaustive, it's not hybrid, it is inclusive definition. And law says person includes. Who are included in the person? In the person, individual, HUF, firm, company, AOP, BOI, and any other statutory person, judicial person. So person includes all those. Individual, HUF, firm, AOP, BOI, company, and any other judicial person. So law says any person means any individual, any HUF, any BOI, any AOP, any firm, any company, any person whose gross total income. Now the gross total income is again a technical word which we need to understand. What do you mean by the gross total income? So if we will talk about the gross total income, so I will say gross total income means what? What is gross total income? It was not defined in the Income Tax Act. But how the gross total income should be computed, it is defined in the Income Tax Act. For the purpose of computation of the gross total income, when we are talking about the method, in this method, the income is divided into the 5 heads. First is the income from salary. Another one is the income from house property. Another one is the income from the business and profession. Another one is the income from the capital gain. And last one is the income from the other sources. So these are the 5 heads of the income. We said 5 heads of the income. So income from salary, income from house property, income from business profession, income from capital gain, and income from other sources. These are the 5 heads of the income. So gross total income means what? How the gross total income will be computed? First we will compute the income from each head. Income from each head shall be identified through its charging section. We will discuss upon the charging section later on a little bit in detail. If any person is having any income, so first we will identify the income will fall in which head. So we will add on. We will compute the income from the salary. We will compute the income from the house property. We will compute the income from the business profession. We will compute the income from the capital gain. We will compute the income from the other sources. And from all 5 heads of the income, when the net income, again, please note down the words. I am talking about net income from all the heads. When we will do the totaling of net income from all the heads, then it becomes the gross total income. So if any person, individual, HUF, firm, AOP, LLP, any person, BOI, any person exceeds, any person whose gross total income exceeds the maximum amount which is exempted from the tax. This maximum amount is a very vital term which we will discuss because we have the 2 types of the computation right now. One is the computation as per the old regime, another one is the computation as per the new regime, and there are the different exemption level in exemption limit in old Income Tax Act as well as new Income Tax Act. But whatever may be the exemption limit, if any person has the gross total income which exceeds from the maximum limit which is exempted from tax, that person becomes an SSE. That person becomes an SSE. And please note, practically, once you become an SSE, you need to file the return. That we will discuss as per the old Income Tax Act as well as per the new Income Tax Act about the rules and sections about the filing of return and income. So every person whose gross total income exceeds the maximum amount which is exempted from tax is an SSE. He is the SSE. So who is the SSE? Whose gross total income exceeds the maximum amount which is exempted from tax is an SSE. And if he is SSE, then what is the liability upon him as per the Income Tax Act? The liability upon him is that he is liable to pay the tax. He will pay the tax. Now the question is that for the purpose of the payment of the tax, you need to have two components. One component is on what income you need to pay the tax, and another component is at what rate you need to pay the tax. So amount of income and the rate of tax is important to calculate the computation of the tax. So SSE is liable to pay the tax, but the SSE is liable to pay the tax on his total income, not on the gross total income. Please try to differentiate between the term gross total income and the total income. Gross total income is the parameter to check whether a person is SSE or not. However, total income is the base on which an SSE is liable to pay the tax. So what is the technical difference between the gross total income and the total income? That we will be discussing later on in more detail. But for the time being, you are requested to differentiate between the two terms. One is the gross total income, another one is the total income. At the rate or rates, in Income Tax Act, for the purpose of computation of tax, we have the various rates. In some cases, we have the single rate. For example, if you are a company, you have the single rate. If you are a firm, you have a single rate. You need to pay the tax at the rate of the 30%. But if you are an individual, there is the rates. Why there is the rates? Because you need to pay the tax in slab. So if you fall in the different slab, you need to pay the tax at the rates. But if you are a firm, you need to pay the tax at a flat rate, and that flat rate is what? That is at the rate of the 30%. So the person SSE is liable to pay the tax on his total income at the rate or rates specified in the assessment year. Now there is the two concept. One is the assessment year, another one is the previous year. Later on we will discuss that now the concept of assessment year and previous year is removed, and there is the concept of the tax year that we will discuss later on. Right now I am only explaining the concept, so please concentrate upon the concept as far as section, clause, schedules are concerned. That we will discuss in detail. Right now we should have the expertise on the concept. So